exams. And I created these study guides all by hand, and I think it's what helped me ace the class in the end, because I would read the textbook, like the chapters, twice, and I did because I paid $200 for them, so of course I'm going to read it. So now, here are the formulas for the exam. So this was for exam 1, where we were just going through all of the basic terminology and equations. I memorized this thing front to back. If you ask me what do all of these mean, I don't remember. They mean something, and they're very important, but I don't remember what they mean. Profitability. Okay. Earnings per share, price earnings ratio, gross profit, profit margin, return on asset, asset turnover, payout ratio. So that was number 1. This is for exam number 1. Let me tell you a funny story about exam number 1. So I took this class during the pandemic. So what does that mean? All of our classes were online. So I said, how are we going to take an online exam? Well, there's this thing called Lockdown Browser. And what that does, as said in the name, it locks you into your browser so you can't search for answers anywhere else. And it also tracks your eye movement. Essentially what it's doing is to prevent students from sticking things around their laptops and seeing all of the formulas that you need to memorize and understand. And it was so nerve-wracking because if you kept looking up and down, like, it would flag you and possibly kick you out of the exam room. And I was terrified of that happening to me. So I just kind of rolled with it. But a lot, like, I think our class average was like 30% or 50%, I don't know. It was bad because people didn't know, like, what this exam was going to be like. But I got so stressed for like the next exams that I overstudied, like, by a long shot. So let's take a look. You can hear the sounds. Okay, let's bring back some memories. Cost of goods manufactured begin with work in progress plus total manufacturing costs. So that would equal your total cost of work in progress. So then you go here, and so then that minus ending inventory would be your cost of goods manufactured. Then you gotta look at your flow of production. I don't know what DM or DL or, I think OH, that's overhead. I know that. So all of that is your work in progress minus your finished goods minus your cost of goods sold. That's flow of production. And then here, there's different like balance sheets and income statements, whatnot. So your balance sheet items are your work in progress and finished goods. Then cost of goods sold is in your income statement. And I don't know what CVP means anymore. I think that's variable cost, and FC is fixed costs. way, shape, or form. Okay. Margin of safety. Margin of safety ratio. I know that's break even. Yep. Let's see over here. Chapter 7. So these are like different charts that I don't remember, obviously. Oh my goodness. Okay. We would get charts like this one, and you would have to fill in the blanks on some of them. So what does that mean? You have to work backwards. And it was very nerve-wracking because I remember the first day the professor asked us, like, we need to ensure that everyone knows how to do like journal entries, and I don't remember any of that from my last class because it was also online and the professor also taught it really fast. So she got kind of concerned when I said that, and we had to go through like a whole run through of it. I still don't get it, but I still passed the class. Okay, let's look at chapter 9. So this is all about your sales budget, then production budget, then DMDL. I think that's direct labor. DL, yeah. And then overhead. I don't know, direct manufacturing. I don't know what that is. Then selling and admin expense budget, budget income statement, and then capital expenditure budget, then the cash budget, then the budget balance sheet. So that would be your entire financial budget. Oh man, I remember these charts. Let's look over here. Fixed cost plus variable cost equals total budget costs. You got your ROI equals controllable margin divided by your average operating assets. Alright. We're gonna skip this page because I can't remember what all of them mean. Let's go on to chapter 12, shall we? Okay, IRR factor. I don't remember what that means. Average investment equals original investment plus value at end of useful life divided by 2. I need to take a sip of water, hold on. Okay. Statement of cash flows. So your free cash flow is net cash provided by operating account minus capital investment minus your cash dividends. Financial analysis. So for this you would do your change since base period. So that equals your current year amount minus your base year amount divided by base year amount. That's how you would get your change since base period. Let's see. Liquidity ratios. So for this, your working capital is your current assets minus current liabilities. Got your inventory. I do remember what COGS means. Cost of goods sold. Okay. Profitability. I swear, I memorized all of these formulas and we only got tested on 5 of them. 5 of them. I was so mad. But better safe than sorry. Okay, so that was chapter 1. I think I did pretty good on this exam. But man, it was was a lot. I didn't expect it to take that much of my time. This is for chapters 11 through 14. Now this one is heavier than the previous one. It would take me hours to write up these study guides. goes this further. So if you're trying to sell an equipment, or selling capital, I should say. Let's look at Chapter 9. Okay, let's look at the benefits of budgeting. I think everyone should have a personal budget because it really puts into perspective how much you're spending. Maybe I could do a video on that, like scenarios of budgeting. I think I'll love that. Okay, benefits of budgeting. So you plan ahead. Definite objectives to evaluate performance on some of these things are spelled incorrectly, but I was just in a hurry to finish these study guides. Budgets are also an early warning system. Coordination of activities, management awareness, motivates personnel. So effective budgeting depends on a sound organizational structure. Budgets are based on research and analysis and forecasting. Budget development within the framework of sales forecast. Participative budgeting. Each level participate bottom to top. Budget has more detail than long-range planning for long-term goals. So you gotta look into more detail. Got your master budget. Go down the line. You got your sales budget, production budget, direct materials, direct labor, overhead. And so that would be your operating budget. All of this. So selling and admin, and then budget income statement. All of that is your operating budget. Next, for your financial budget, you have capital expenditure budget, cash budget, and then budgeted balance sheet. Okay. So this would be an example of an overhead budget. Direct labor, variable cost, indirect material, indirect labor, utilities, maintenance. So these are your total variable costs. Fixed cost, and then I don't know what all that means, but okay. These are like your cash budgets. Yeah, these study guides take me like 3 hours to complete, and I made tons of them. Tons of them. Like these, I think were for the final exam. There's so many of them, and so many notes that I had to take. This is for a pre-test. study